can't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground then it go off. Yeah, hit the ground then it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Boom! Good morning, everybody. Happy Thursday. Welcome to another edition of the morning show on Stock Market TV. Spencer Israel here. I've got Steve Strazza. I've got JC Parets. And man, are we excited for today's show. Holy moly. I'll give you a hint. We're going to talk about Nvidia. Just a little teensy bit about Nvidia. It was an absolute doozy of a report last night. That'll be the top story today all across Wall Street. In addition to that, we will of course be joined by Kimmy Circle, as we are every single day on this show at 9:15. We'll also be joined by Sean McLaughlin, head of All-Star Options. And at 9 o'clock, our featured guest today, Todd Sohn, ETF and technical strategist at Strategist Securities. Looking forward to that one as well. That's the agenda for the day. Drop us a like, hit the thumbs up, tell your friends, tell your neighbors, and let's roll.
All right, what a night, huh? What a night!
What a night! Are you gonna ask? You're gonna ask me why I'm wearing my Florida man jacket?
Dude, that's a great jacket. Is that a bull market jacket? Is that what's going on there?
No. Yeah, probably. But it's mostly
bull market in Florida sports.
It's a foreshadowing to the Super Bowl. Dolphins in the Super Bowl, right?
Yeah, but Miami and Florida at large, really. I was thinking I wouldn't wear this again until we could say, hey, the Heat are in the NBA Finals. But Florida's just doing so much winning in the interim that I had to bust it out.
Is this a DeSantis on Twitter thing? Is that what this is all about?
The governor of Florida broke the internet last night, so that's great. I'm very bullish on presidential announcements and things taking place on Twitter. The mainstream media is so mad, they don't realize they lost this battle many years ago when people lost trust in them. So that's just opportunity for these new media companies and platforms. So I love to see it. But really, that's not all of it. Florida Panthers, Stanley Cup. I know how much you love hockey, so let's go.
Because there's so much hockey in Cuba where my family's from, you know.
Maybe I'll go to a Florida Panthers game.
I used to go when I was younger. I love hockey games. When I lived in New York, I'd go to Rangers games all the time against the Bruins, against the Devils. I loved it. It was great.
Rangers playoffs games, great time.
It's pretty awesome. It's pretty great.
So I'm excited about a lot of things.
All right. But you're most excited about earnings here. We got Nvidia overnight. It was the big story of the night. Let's talk about it.
I just want to start out by just a simple fact that Nvidia added $200 billion in market cap overnight on this news release. Yeah. And that is the equivalent of Intel and Micron combined in market cap overnight. Just to put things in context, I'll give you another fun fact. There are only 30 stocks in the S&P 500 that are bigger than what Nvidia increased in market cap overnight. Like just a few stats to throw out there for people who don't understand quite the magnitude of what just happened. Kind of a big deal.
That's right. So let's just, can we see where Nvidia would be right now? Let's show the next chart, the very next chart. Yeah. All right. So that's what this thing's going to look like in about an hour. That's what we're going to open today. So this is a almost $1 trillion stock now, probably around $1 trillion. It was about 800 billion before this. And it's up 30%.
I mean, listen, it's up 30%. So what? 1.3 times, what was it? 755. So it's like just a few billion shy of $1 trillion. So shout out to Nvidia. Shout out to shareholders. Short sellers in Nvidia were awfully loud this weekend. I hope nobody listened to those people. This isn't exactly something that you want to be short, something this strong. And now, from a tactical perspective, it's like, all right, great, JC, 200 billion this, Micron and Intel that, 30% this. What do we do about it if we're not in it? I think we could use those late 21, early 22 pivot highs as the level. Sometimes you get a little bit of an earnings fade after the gap up. If we do that, I'm an aggressive buyer. Anything above those former highs, what are we looking at? It's about 340. Do I have that right? About 340?
Not sure.
Tell you right now, about 340.
Yep.
Those are the former highs. Is that a good level?
If you get it. If you get it.
Oh, yeah. If you get it. Yeah, about 340. That's the level. Above that, and you're good. Above that and you're good for the time being. I think that if you're not in it, you could look for that pullback. 500 is next. That's the next level. 500 after that.
Slow down here, Spencer. Give us the numbers and let's just talk about what really happened here.
All right, so the backward-looking numbers were very good, but it was the forward-looking numbers that really blew everyone's brains. All right, so the EPS for last quarter, $1.09 versus 92 cents, beat. Sales, 7.19 versus $6.52 billion estimate, so beat there as well. This is what they said, though. Oh, and also record revenue for their data center. That was all good. They guided second quarter revenue of $11 billion. The street was thinking it was going to be around $7 billion.
That's right.
So they just blew that Q2 revenue guidance number completely out of the water. CEO said we're at the beginning of a 10-year cycle. He's referring to AI, that is. The whole call was AI.
But I thought the AI was just hype and it wasn't real. It's just another bubble. Is that?
So these guys are actually selling the computer chips that other companies will have to use to create AI software or AI products and services.
So these guys are the picks and the axes. So if nobody ever
100%.
finds gold, it doesn't matter. These guys still print money. Is that the
100%.
TLDR?
This is the nuts and bolts company for the AI revolution that is taking place right now. There's no better way to invest in AI than NVIDIA right now. And that's what you're seeing. I mean, AMD and Micron rose more on NVIDIA's earnings report than their own. Right. So they're dragging up the entire NASDAQ. The NASDAQ looked like it was going to undercut those August highs yesterday. Throw up the NASDAQ futures chart. Instead, it's just looking like a textbook retest. Now the entire NASDAQ is being dragged higher up like 1.5% this morning, really on the Nvidia beat. So this is what NASDAQ futures look like right now. This is a trend that's going to be really, really tough to fade. I would imagine all dips in Nvidia get bought up almost immediately because they have now risen to as the clear leader of this AI trend, right? There's no better way to put on a bullish investment thesis for AI than with Nvidia stock. So just, I was just talking to a friend about it who pays attention to earnings reports every morning. And I said to him, these earnings were historic. I've never seen anything like this. He said, beyond historic, never seen anything like it before. Kind of scares me. I saw this a few times in 2000. Hope history isn't repeating itself. I mean,
why does everything need to be compared to 2000?
I know, but this was the kind of report. Analysts on the call couldn't believe that they upped guidance that way. I mean, a stock or a company saying, no, it's not going to be $7 billion in revenue. It's going to be 11. That's ridiculous. We're talking about quarterly revenue, not even annual here. So let's talk about what this means for the stock. Past couple weeks to months, people have been talking about how the valuation for Nvidia is bonkers, absolutely nuts. Can't touch this stock. The valuation is too crazy. Guess what? Stock is up 30% right now, but it's cheaper today than it was yesterday. JC, that doesn't make any sense. Can somebody explain that to me?
First of all, I don't know who told you that the market needs to make sense, right? A lot of people are like, well, fundamentally, it's overbought, or, fundamentally, it doesn't make sense. It's like, well, fun fact, nobody gives a shit about your interpretation of the fundamentals.
Right.
Nobody cares about mine. No one cares about Strazza's. Certainly nobody on this chat. Nobody cares. It's only the market's interpretation of the fundamentals that matters, not anybody else's. So I'm not interested in the fact that you think that this is overvalued or too expensive or whatever that means. That doesn't mean anything to me. The trend is up. I'm a buyer on weakness for sure against those former highs.
I'm not saying the stock's overvalued. I'm saying people are saying it's overvalued. You never want to short a stock on valuation concerns, and this is why. A lot of the estimates that are used to produce those valuation metrics are routinely incorrect and revised. And that's
Strazza, why on God's green earth would anybody in their right mind want to dilute something as factual and truthful and pure as price with something as arbitrary as an earnings estimate? I don't know what kind of serial killer would think that way. That doesn't make any sense to me.
Well, this is a good example. I'm talking your book here then, and let me go.
You usually are, by the way.
So Wall Street and the company itself just realized we have to revise next quarter's revenue estimate by about 55%. This is the 6th largest stock in the world. And they're changing the revenue numbers for just next quarter by 55%. I mean,
what is it? 5 in America, Saudi Aramco, and then this? Is that what it is?
So then it's 7th. Yeah, if you want to include Saudi Aramco, sure.
Are you counting Google twice?
I'm not going to count Google twice because no, absolutely not.
I thought that they were now the 5th. Either way, are we going to get into the state of the markets? I think
You're done with this? All right.
I mean, we're not going to be done with this for a long time. I mean, this seems to be an ongoing theme. I don't know if you heard this AI thing is a big deal. You know, if you want to stay up late and watch conspiracy theory videos on YouTube, you're welcome to join me.
I mean, can I just add a couple quick things on the Nvidia? So the analysts, as you can expect, are tripping over themselves this morning to make sense of all this. Dan Ives from Wedbush, I thought this is a good quote. In 22 years of covering tech stocks and large cap, we have never seen a guidance range of this magnitude on a large cap tech name, and thus speaks to our thesis on AI, blah, 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 blah. So second thing I'll say is that with regards to the picks and shovels analogy, Nvidia, really, you could say they assemble the shovels. But who makes the parts for the shovels is Taiwan Semiconductor. Don't forget that, right? So they're up this morning too because they actually NVIDIA outsources their chip production to Taiwan Semi. So Taiwan Semi is up on this. So keep that in mind.
Look at Spencer Israel dropping the heat this morning, telling it like it is. I like it.
Yeah, you're welcome. Right. So that Wedbush note was really good, Spencer. Thanks for reading that out. They named some, let me just finish that sentence you were reading. Right. So they said the magnitude on large cap technique, but it speaks to our thesis that the monetization of AI for stalwarts this is what we've been saying. Here's how you invest in AI, right? Microsoft, Alphabet, Amazon, Oracle, Meta, Apple, Salesforce is well underway in this Game of Thrones battle among tech players. Then they also named some peripheral.
Game of Thrones battle in the Wedbush doc. I like it.
Lives is good. We also believe AI plays such as Palantir, C3 AI, Tesla, AMD, SoundHound, as well as contact center plays like NICE Systems, that's ticker symbol NICE, are clear benefactors of this informational technology.
Interesting.
So, I mean, listen, I still think just you want to invest in the big boys, the big cap tech companies. The economics of these businesses is absolutely insane.
Google, Microsoft, Nvidia, don't screw around. You want to mix in a little Palantir, knock yourself out, but you know, stick with what's working.
I mean, Nvidia's gross profit margins are almost 70%. It's just there's a lot to just wow about in this report. And I would imagine, you have to think about it too this way, right? I was thinking last night, tech stocks, whether it's software, JC, semiconductors, internet names, these guys are coming off the worst bear market they've had in over 20 years. You got to go back to the dot-com bubble for the last time that these companies, these specific industry groups were killed the way that they were the past few years.
Yeah.
Now, as that just is ending, right, and the market's trying to bottom and find its footing from the selling pressure of the past 2 years, we have one of the biggest secular tailwinds in technology coming our way for these companies, as if these companies needed another tailwind, right? So I just think it's going to be hard to bet against this trend in the future, especially when you look at some of the companies that are benefiting this are coming off of 70, 80% drawdowns. So, I think there's a lot of ground to be made up here.
Yep. I mean, Meta got absolutely destroyed. It's tripled off the lows. Just a good example. You're seeing monster moves in huge market cap companies. These aren't little nothings, right?
They just discounted the hell out of these companies right before, the next big wave of technology hit them. And, it's going to hit all their bottom lines. and make things appear a lot better. So again, just back to valuation. Don't just turn off the news when they tell you things are too expensive, because if something's too expensive on a valuation basis, there's typically a really good reason for it. And it's usually that the street got it wrong, or even the company itself, like in this case, got it wrong. And you're going to see those estimates come up in a big way, and then that valuation will come down and get more in line. And that's
are you saying that the sell side analysts are chasing price higher and revising higher? It's, if you zoom out and look back at every bull market in history, that is exactly what happens.
You would enjoy the NVIDIA call because these guys didn't know what to say.
Straz, I love you, bro. There's zero chance I'm listening to the freaking call. You can listen to it and then tell me you did listen to it and you told me about it. That's good enough for me. I'm good.
I had to listen to it. Yeah, last
Knock
night
yourself out.
A lot of good media last night.
Spencer, let's give the people what they want. So for me, I think let's just reiterate what's happening here in slide 3. You know, we have monster positioning short. These are large speculators. These are major hedge funds with historic net short positions, betting on a complete collapse in the stock market. The question that I ask the audience is, when you see large speculators, it's not all hedge funds, but think of it, I like to think of it that way. Think of it as big hedge funds. There's other institutions too, but just think about it as major hedge funds, as sort of like a rule of thumb. Do you think that they're going to be right on this historic short position, or are they about to get squeezed the hell out like Nvidia shorts? And remember, Nvidia is a monster holding in the S&P 500. So all of these people and all of these institutions that are short the S&P 500 futures are short Nvidia, which is the 4th largest component in the S&P 500. And it's probably a larger component at the end of today, for that matter, if I had to guess. But what do you think, Strazza? Do you think that these large speculators are going to be right in their historic net short positions?
I think that they're going to be wrong, like they always are. You know, this is just another one of those things that you can add into the fire, right? You can add into the mix right now. Market wants to go higher. All these guys are going to have to cover these short positions, and you know that's how you get big moves. That's how big rallies are sparked.
Let's talk about what else is in the S&P 500 other than Nvidia. Punch up the tech and healthcare. You got technology at 26.5% of the S&P 500 before this Nvidia move. It's probably bigger now. Healthcare is 14.5% of the S&P 500, 20% of the Dow, by the way. So these are two very important sectors. So if you want to go to the next slide quickly, if you're wondering when the S&P 500, or even if the S&P 500 is going to break out of the range that it's been in over the last year, go back to the slide up top. These are the sectors that are going to take us there, right? It's pretty much like just math. This is kind of how I look at it. Reverse engineering the S&P 500, you know, these are two major. And by the way, in technology, is 26.5% of the S&P. That does not include Google. It does not include Meta. It does not include Amazon. It does not include Tesla. No, none of those are tech stocks. Those are communication stocks. Those are consumer discretionary stocks. So if you add all those, you're talking about half the S&P 500 is just, you know, these two groups. So I think that they need to be front and center as far as I'm concerned if the S&P 500 is going to break out higher. And we had a comment from Bingo asking the chubby Cuban to comment on the only index that matters, the Dow, because it's flat on the year. First of all, I don't know where you got that the Dow is the only index that matters. Very far from it. There's a lot of indexes that matter around the world. I would argue the Dow Jones Industrial Average is probably the most important stock market index in the world. You know, when you talk about what did the market do today, you talk about the Dow. And as far as it being flat on the year, sure, if you want to anchor to, you know, a day that we stay up till midnight and drink too much champagne, knock yourself out. But year-to-date returns don't actually mean anything. If you want to mark it back to the October lows, the Dow Jones Industrial Average is actually averaging 3 times the average annual return. So you're seeing historic returns from the Dow Jones Industrial Average, despite a lackluster beginning to the year as money rotates into technology and growth, which, if you recall, were really the only areas not performing in the back half of last year. You had a lot of stocks in the Dow Jones Industrial Average, industrials in general, value areas in general, as interest rates were going up, were truly the outperformers. And then what happens? In sector rotation is the lifeblood of a bull market, and that's precisely what we've seen in this bull market. You're seeing those laggards catching up. Technology, obviously, front and center. Growth in general, front and center, continuing to get that rotation. So, if this is in fact an ongoing bull market, if we continue to see the sector rotation that we've seen until now, what would be the next logical rotation is that we start to see industrials and energy and financials catching a bid, small caps, emerging markets you could throw in there. These are some of the laggards that I'm keeping a close eye on to see if we do get that rotation, because that would be perfectly logical, right? If this is a bull market, if this is a strong uptrend, healthy environment for stocks, that's coming next. So that's what I'm watching out for.
I mean, let's not forget, right? When it comes to the Dow, those good old blue chips kicked off this whole bull market party for us late last year, right?
Yeah, no, I mean, no question, because remember, interest rates were ripping. I mean, interest rates were moving faster than we've seen in 4 decades, right? We saw like monster moves in rates. So growth is just going to have a hard time in that environment, and it did. And then a funny thing happened in October, Mr. Strazza.
Yeah. Interest
rates stopped going up. And then all of a sudden, all these growth stocks start ripping, and it really kicked into high gear coming in the beginning of the year. And we talk about the historic short position from the large speculators in S&P futures. But, coming into the year, you saw the largest short positions in a lot of these growth stocks that we saw the entire bear market. So these short sellers, not only did they not cover like you said, on the biggest decline for growth stocks in 2 decades since the 2000s, the biggest bear market for tech and growth, not only did they not cover their short, Strazza, these idiots added to their short positions where they came into the year the most short that they were the whole time. And yes, were there some traders who took profits on their shorts last year? We were short Tesla in the fourth quarter. Yeah, of course. But what counts is in aggregate. And in aggregate, they did not cover their short positions. They launched new perma-bear funds and increased their short positions coming into the year. And then you're seeing the squeeze. You're seeing the unwind. So when you look at the S&P futures and the large speculators this short, I have a funny feeling that they're going to get squeezed too.
So can I add a third or an honorable mention to your technology and healthcare?
Are you going to say industrials?
I'm going to say communications, right?
Okay.
Because I want those big boys. Google, Meta, there's a lot of big stocks in communications that are also big stocks.
Netflix.
Indexes. This is what communications looks like. It's also what technology looks like. This pattern here, what you're seeing from the upper left, you go from downtrend to sideways trend. That's where I have all the green arcs drawn. And now you see it poking its head above those pivot highs. This is telling us a new uptrend is underway. So if a new uptrend is underway for communications and technology, I think the NASDAQ and the S&P are going to be in a new uptrend phase too. Because I think, those two groups have the biggest players that drive the indexes themselves.
Communications, 8.25% of the S&P 500 and 17% of the NASDAQ.
Yeah.
NASDAQ 100.
Has some of the biggest components. It's not one of the biggest sectors, but it just has some of the biggest components. I think that's important. The other thing I'll say just about yesterday's price action, right? Because we've done a lot of work on here for the past week about talking about how important it is to ignore the narrative and pay attention to price. Market was under pressure yesterday. You remember why? Nobody remembers today because we're on to the next story. But why
was it a debt ceiling? They're trying to raise the roof or something?
We were talking about it with Netta, right? I think maybe these FOMC minutes, maybe
the minutes, yeah.
Right? That's all undone now. And we're back to where we were a few days ago in the NASDAQ, right? On one company's earnings report. So this secular tailwind of AI just trumped the FOMC news, and nobody's even talking about it right now. Nobody even remembers it. It was just yesterday.
And we're getting people in the chat saying how AI is not a new thing. Yeah, we know that, right? We know it's not a new thing. I've been working for an AI company for 18 months almost. So yes, I'm aware it's not anything new. Thanks. But
the Fed's not anything new either, but we talk about that almost every
right.
Day, right?
The market is now pricing it in, right? So, there are things that people have been talking about for many, many years, but until the market actually starts pricing it in and starts respecting that, it doesn't matter. right? It doesn't matter. Like 3D
Frankly,
printing and all that stuff, it never panned out. Like it was just a story, fugazi, you know?
and
We're seeing the market pricing that in now.
frankly, I disagree. It is new, right? Because we've all known about it and known that it's coming, right? Just like with a lot of these tech things that they promise us, but it's now here. It's here and happening now and being priced in. And we're seeing it in price almost every day. So to us, it's kind of new in that way. So listen, you want to take it lightly, that's fine.
Well, that's the whole point. It's not new to us. It's new to the market.
Steve Cohen gave a speech at some private event a week or two ago. One of the greatest investors now and of all time, right? And his entire speech was around get ready for a new secular bull market. And the reason for that, in his opinion, was because of the AI trends. This is the type of trend that, just like, you know, the birth of the internet 20 years ago, can drag the entire market up. These tech companies have such big weightings in our indexes that is very much going to be the case, in my opinion. So if you're not taking it seriously, I think that's a mistake. It's a big deal right now. We're going to keep talking about it.
Todd Sohn in the green room right now, ripping Strazza's jacket, asking me to remind you that it's 2023, not 1985.
Todd Sohn is the greatest low-key troll out there. This guy is making fun of me for stuff all the time. He's always picking on me. He's hilarious. So let's hear it, Todd. Can we bring him on? I got to wait.
Yeah, bring him on. Bring him on, Spencer.
Did you read his note, JC?
Right now? All right. Yep. We got his note right here, actually. So we're good to go on that front. All right. I'll bring on Todd Sohn. He's our featured guest for the day.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Todd Sohn in the house.
That jacket is something.
Hey, buddy. You like it?
Miami Vice. I mean,
Todd, why are you hating? The world does not revolve around New York City. All right, I know in your head it does, but there are other cities with other cultures and whatnot. You should look into it. It's kind of a thing.
That jacket wouldn't fly here.
It's my Florida man jacket.
Dude, that jacket is sweet, man. That jacket is sweet. It's a bull market jacket.
All
right, Todd,
Florida jacket.
Give it to me. Listen, so Todd Sohn, for those of you who guys don't know, Todd Sohn, one of the best technical analysts on the planet. I'm happy to give you that credit. I love the work that you guys do there. So I want you to come in. Just give it to me. What are you thinking about right now? What's on your head? We can get into your note in a minute. What's on your head?
So, and you guys were touching on this before with Nvidia, with the largest weights, right? That's causing a lot of, I'd say, consternation, a little bit of frustration from our clients, because it's difficult to own that much of a single name, right? Owning 7% of Apple in portfolio is, goes against the guardrails, right? You can't really do that much. So there is a concern with that. And then the narrow leadership, right, which you can or can't agree with, is also a point of agitation amongst clients. And so I think really the most important chart now is equal weight S&P. It comes down to that.
I think the most important chart is the equally weighted S&P 500.
Yeah.
In what way? The relative trend or the absolute trend?
The absolute trend. Listen, equal weight stocks can outperform, especially coming off of market lows. They can underperform for an entire decade, like in the 90s. That's just part of how leadership works. I don't love seeing when the average stock goes down, though, while the big names go up, because then you're talking about real thinning participation, a market that is going on less and less legs. And Steve, we were talking about this the other day. This is the stars and the bench.
Yeah.
Right. The sports analogy that we love.
So wait, hold on. Let me give you some context for this. A few years ago, we had a similar situation, Todd, right? Where everybody was complaining. You know, we had the FANG acronym became a big thing, and everybody was complaining. It's 5 stocks driving the market higher. And I remember you put out a note or said something. Maybe we were just discussing it, and you told me the best players are supposed to score the most points. And I just love that. It's always stayed with me. We say it all the time, you know, internally when we're talking. Explain what you mean by that. And then what that means about this thin leadership, and maybe it's not so abnormal or much of a concern at all.
Yeah. So you think about sports teams, right? We'll take the Heat. Jimmy Butler scores 30 points a game. He's supposed to do that. Jokic on Denver puts up 30, 10, and 10. That's what he's meant to do that, right? That's what they're supposed to do. It's the same way with market cap weighted indices. These names have been voted the best names. They're the largest names. So they will obviously add to index gains when they go up. And it's become more and more magnified as you've gotten trillion-dollar companies.
And if Jimmy's hurt, the Heat are going to struggle. And if Jokic, or if you're a Knicks fan, when your stars don't show up, you keep losing, right? When the stars don't show up, right? When like Randall, like he didn't even show up in the series and they lost. If Nvidia and Apple are struggling, the indexes are going to struggle too, right?
Yeah. So out of this, Jason.
You like that Knicks dig there?
That was a good one. It's exactly what happened too. And so the stars are doing what they're supposed to do, and they're impacting the market cap weighted index. They're dragging it higher. You need to make sure that the bench though is still contributing in case those stars start to lag, get tired, consolidate, correct. You need to see the bench hold the team together, and that's where the equal weight S&P comes in.
So the bench needs to participate. Right, the rest of the stock market needs to participate, but they don't need to lead. And frankly, it's hard for them to lead, right?
Duncan Robinson's not going to drop 40. Could
he could once in a while? I wouldn't expect it every day. Listen, energy can rally, financials can rally, but I wouldn't look for them as maybe secular leaders right now in terms of the Duncan Robinson type of thing.
Todd, the bigger problem for me isn't about 5 stocks are leading. It's more about like the money managers or RIAs, like. How do you beat the market when the big boys are doing what they're doing? Unless you're going to create a portfolio that basically mirrors the indexes, aren't you going to have a tough time beating the market?
It's a really tough time. Everyone's different. And then it comes down to risk. Are you comfortable owning more than 14% combined of Apple and Microsoft? Because that's what they are in the S&P right now. Are you going to say, okay, I'm going to own 25%? So that's really difficult. Or you got to go to other areas of the market. You got to go abroad, go to Japan.
I was going to say, you took the words right out of my mouth. Let's talk international. Japan, Europe, Germany, new highs, France, Denmark. I mean, can we talk about the international strength and what you're seeing there and what that means to you?
So let's start with Japan. It is, you can make the case Japan might be the best looking chart out there, right? We've been here before. Japan always bases, it goes up. It's the broadest. There's some 70 to 80% of stocks above the 200-day in the topics. And what I like about Japan, showing you the chart here, over the last 10 years, Japan and China, they kind of rhyme together in terms of performance, but all the attention has been on China. This is just a small slice of the investment world with ETF flows. About 29 billion into China over the last 10 years, minus 2 billion into Japan over the last 10 years. Now, I think Japan is way more timely. And I think you'd be surprised. We always get attention in client conversations on China. There's a growth story, whatever it might be. But if you go back over the last 30 years for China, the annualized return is less than 1%. And that's basically terrible. And you're getting immense volatility there. Right. And we've seen what happened to Tencent and Alibaba over the last couple of years. They've been, really rocked there. That's hurt their market. And so I think there's way more attention focused on EM in China than there is on Japan. I like that from a sentiment standpoint. In Japan, when you go through all the names, there's way more names that are breaking out than looking very toppy at all. The constituency is great for Japan too. It's not too heavy tech. There's a lot of industrials which are working. There's a lot of good consumer names like a Sony and Nintendo. It's way more balanced than say the S&P 500. Europe, yesterday had a first crack, right, downside move there, but similar scenario. You don't have that big tech exposure. It hasn't worked in call it 2 decades, right? The European luxury names have been on fire. That's the better way to play China, by the way. If you're too afraid of Chinese markets, play the luxury names. I know they're pausing here. That's okay, because they get a ton of their revenue from China. Think about LVMH, Dior, Gucci, names like that, right? Carrying. Those are the best derivative ways to play China. So I think that's a meaningful alternative for investors who are saying, okay, I'm a little afraid of what's going on here with the big weights, what that's worth.
You know what's interesting, Todd? When you talk about emerging markets, because the strength that we've seen has been in developed markets. I mean, Europe's up like 50-something% in the last couple of quarters. Like, these are astronomical returns. People were telling me we're in a bear market. When we talk about emerging markets, it's really been the laggards. But you know what stands out to me? That it's not like China. It's not like, oh, China, and the rest of emerging markets are doing good, but China's not good. Or, China's doing great and the rest of emerging markets are not. Like, they're kind of like all, Latin America, China, like they're all kind of in the same boat. Anything stand out in emerging markets that's not struggling, or you want to touch on the fact that they're moving in sync, or you see any differences between the different regions?
EM has just, you got to blow up EM and reinvent the whole scheme of it, because there's too much China, and you're seeing EM ex-China products start to really come out from a lot of issuers. I think there's been 4 or 5 this year. So that's helpful.
What is it, 40% in the MSI index?
It was 40.
30 something.
It's down to 30. It was 40 back at the peak of, say, Baba and Tencent.
Yeah.
Way too much. Cases play active EM, but there's so many stocks there. But I do like what is going on from, you look at Taiwan, right? That's Taiwan semi, basically. Nice move overnight. Korea, Samsung also trying to bottom out and turn here. That's probably a better opportunity than playing China. At LATAM, I don't know. I always struggle with LATAM. It's too messy for me. I mean, Mexico has been great. We can talk about that here. Go ahead.
Do you look at China and think, oh, China's weak, that's not good for international equities at large? Or do they just kind of beat to their own drum and do their own thing?
I think that used to be the story. Like, oh, all these companies have exposure there. And now it seems like over the last 3 years, especially with COVID, just in real world type stuff, everyone's moving out of there.
Right.
Like this, think about supply chains and whatnot.
Deglobalization.
Exactly. And so I think the market is moving on from that and realizing it's a mess there. The market is all over the place. And we're becoming less and less influenced by what's going on. Like Chinese markets don't look great right now. The equities are bad. The yuan is weakening.
New lows yesterday for FXI.
Yeah, not great. And it still gets a lot of attention though as a region in conversations because of the growth story or whatever you want to call it.
Well, Todd, what about the Nifty 50?
Nifty 50 is interesting. I think if you get growth to really come back here, we're seeing with Nvidia, Apple, Microsoft, if that starts to expand. You can talk about the ARC names too. Nvidia, India should be a beneficiary of that. Like look at Tata Motors, actually one of the better auto stocks around the world. Autos here are kind of pretty murky. Tata's pretty good.
Yeah.
You buying this pullback in Toyota? Speaking of Japan,
I think Toyota's trying to turn. I like Honda a little bit better. And the European autos a little sloppy recently, but they're also better than the U.S. counterparts too. So.
Where do you put India in the whole emerging markets world? Is it kind of like its own animal, or you think it fits in normally, or what?
I think if you're looking for non-Taiwan, China exposure, then that's your place to go, right? That little corner of the Asian geography, if you wanted to get away from there, look to India. Especially while LATAM, your other option is just kind of all over the place. It's a big market. There's some decently sized name there, so liquidity shouldn't be too big of an issue. I know there's some restrictions on the stocks there locally, but that's another growth area if you're really looking for something ex-China. It'll have a significant weight too.
I want to circle back to what you were talking about originally on the equally weighted S&P 500. It looks just like industrials. Right. If you look at the S&P industrial sector and you overlay the equally weighted S&P 500, they look exactly the same. So is that not what we're talking about? So in the back half of last year, you saw a lot of strength out of industrials and a lot of the more value-oriented names. And, by the end of the year, it was really only the growth stocks that were not participating in the rally. And then all of a sudden, come this year, you got the rotation into growth, and it's just been a monster ripper, and you're getting that sector rotation. I want to hear your thoughts on if this is a bull market, if this is a healthy market environment, do we absolutely need that rotation into industrials and into the more value-oriented areas immediately? Like, does this need to happen like now? Or it could be a situation where growth continues to drive the market, into maybe the back half of the year, and then eventually you get the rotation. Does it need to happen sooner? Because I tend to lean like, we got to see some rotation soon, I think. No, small caps, industrials, financials can't be breaking last summer's lows. Small caps can't be breaking last summer's lows. Like, this needs to happen now, no?
Yeah, you said it right there. As long as they don't break the lows, okay, we're in decent shape. Growth can continue to work higher, but eventually, yes. I think it's hard to put an expiration date on when you need to see a little bit of rotation. The longer equal weight S&P industrials spend sideways, the more frustrated I think people will get, more nervous, which actually in a way will create a sentiment tailwind, right? If you think about that, people will start getting really bearish. But yeah, eventually
you mean they're not bearish enough right now?
I mean, they're pretty bearish by my work.
Before we let you run, talk to us about sentiment. You say by your work, sentiment is pretty bleak. You're looking at that as a tailwind for equity prices higher. Why don't walk us through your thought process there on sentiment?
So I think we all know about the futures positioning, deep short there. I don't know if there's a complicated reason for that, but it's short, right?
Yeah, but Todd, they're hedging their long positions in tech.
Yeah, that's what people.
You don't buy that?
I don't know. It seems pretty aggressive to me.
Agreed.
Flows to equity ETFs are very restrained this year. One of my favorite charts here up on the screen. If growth outside of these mega cap names was getting very aggressive, you'd see it in ARK. That is candidate number one for saying, okay, sentiment towards the growthier corners of the market is coming back. There's been no flows to ARK over the last few weeks as it's perked up.
So
you think ARK is still a good benchmark for that? You don't think it's lost its luster? You think it's still a good benchmark?
I think it's still a very good benchmark for the really long duration assets, the really growthy corners of the market, Apple, Microsoft, your Tesla, Roku, Zoom type names. I look at that. There's nothing there. I look at broader equity flows. They've been very restrained this year. There's more money going into bonds. All the rage is about money market funds. Every single conversation we have is, well, what about money market funds?
Dude, seriously, I've never seen so many people excited about cash in my life, man.
Exactly.
Dude, for real.
5% is good, right? That's actually halfway to a decent equity year. But so you add that all up together, and that creates the type of sentiment tailwind. I think that is very favorable. Maybe the survey data is not washed out like you see at prior lows, but
we're coming off of washout levels.
Yeah, true, which would mean a helpful readjustment. But I just go back to the money market thing. Everyone is talking about money market funds. We haven't had that in a long time.
I got Howard Lindzen calling me, bragging about his 5% on his money markets. I'm like, what is this world coming to?
So you look at that, you look at kind of the sloppy tape from corners of the equity market, and I think that's a really favorable backdrop. We just need to see the rest of these stocks start to participate, the bench get involved.
We got to see an expansion in the new highs list, right? That would be nice. A nice addition.
Yeah. If you get a couple of good weeks from stocks, that'll expand.
Because we're right there.
You're in the red zone.
Yeah, you're in the red zone. I like that. I love your sports analogies, Todd. Right between Todd Sohn and John Roque. When it comes to the sports analogies, two of the best in the business.
Yeah, seriously. He's an influence for those analogies on me, I think.
Yeah. Two frustrated Knicks fans, bringing it into the markets.
We should do a dual interview. We got to get Roque on here next week to talk about this Mendoza line of his.
True. It's true. All right. Fun Police is here to kick Todd out. Todd, if you had to buy something this week before the week's out, what are you buying? Give it to me.
Nvidia.
Okay. All right, you and everybody else apparently.
I think they take a look at some of those ARK funds. They're interesting. I mean, you could get really burned by them if they're not real bottoms.
One more. I know you look at a lot of analysts. Sorry, Spencer. I know you look at a lot of analyst ratings. Todd, anywhere stand out where they're just not getting any love, or maybe they're getting too much love?
I think really the broader market, honestly. I mean, you look at some of the average S&P targets like flat right now.
So the revisions, you're noticing all the revisions keep going higher. Classic bull market behavior.
They're starting to do it because you have to, especially when these big names start moving that up. That creates a tailwind for the index. And you just got to see the bench get involved.
Well, have you guys done any work around, the percentage of stocks that are actually seeing positive reactions to earnings this quarter? Because all I'm hearing about is earnings recessions. And then I get to my desk every morning and I look at the stocks that are reporting earnings, and I'm seeing a lot of breakouts on earnings. So
off the top of my head, I don't. My buddy here behind me, he's the guy who's the keeper of all that, so I can ask him.
Well, we'll have him on next time then, Todd.
All right, Todd Sohn is the ETF and technical strategist at Strategist Securities. Todd, always a pleasure, man.
Thanks, Todd. Man.
Good to see you.
All right, at 9:15 every day, we bring on Kimmy Sokoloff, our resident day trader. She live trades the open every single day, and we ask her, what's on her watch list? Well, first, what did she trade yesterday? What worked? What didn't? And what's she watching today? Let's find out.
Kimmy.
Good morning.
Hi.
So you that's you pushing that Nvidia stock higher, huh? That's you with your big weight back there.
How you doing?
Are we chasing this or are you fading the Nvidia?
No, I'm not chasing it. It's a crowded long.
Are you fading?
Yes.
You're looking to short Nvidia in the morning.
Not necessarily today. I am watching it. But yeah, I'll be fading that.
Because, I mean, listen, this thing could continue higher in the coming weeks, but that doesn't mean that you can't get 3, 4 points, 5 points, 6 points quick in either direction, right? Like this thing's going to be moving.
Yeah, but I will look for a bigger move in this, like 20, 30 points. Like I'll look at least 10 to 20 points on the short
From the
side.
short side specifically.
Correct. Yes.
And what are you looking for from the long side? Not in Nvidia,
yeah.
just in general.
I'm watching, which I don't always love the way it trades. It's already popping this morning. Roku.
Yeah.
So it started to creep up yesterday watching it. We'll see how it goes. It's already popping this morning. I need to see how it handles this pop if it pulls back in, and see how it handles the 59.40 level. We'll see. Also, I'll keep my eye on RBLX. It's creeping up. It's a tough one to trade. So I'm also watching RBLX. If it gets above 41, see how it handles this area. If it can move to 42.88. I did recommend it last week. It had a nice pop. It's in this channel. We'll see if it could get going or not. Sometimes
RBLX from the long side, Roku from the long side, Nvidia from the short side. And just to reiterate to a lot of people, because we've been talking about Nvidia so positively, how overnight it's literally Intel's market cap and Micron's market cap combined is what Nvidia is up. I mean, we were talking, Strazza and I earlier today, this might be the largest market cap gain overnight ever. Microsoft a few weeks back was like 150 billion or something like that. This is closer to 200 billion. So incredible. Let me ask you this. Okay, so just to reiterate to the audience who might not know Kimmy, Kimmy is intraday mostly and looking for mean reversion. So it's not so much that she thinks Nvidia is a scam and it goes to zero, but up $200 billion overnight, a little bit of a fade, a little bit of a give back can be a monster day from the short side. So she's looking at it from strictly an intraday perspective. And that's what Kimmy tends to like to do, right? Kind of fade those gap opens with a tight stop, buy the gap downs with a tight stop. So I really just wanted to clarify. So why is Kimmy shorting Nvidia?
just look under the hood. Listen, hey, this deal negotiations, if it goes through, odds are the market pops again. But just look. I know the Dow's only 30 stocks, but look what's going on under the hood, right? Dow, DIA breaking down below the 200-day. IWM very weak. If it doesn't hold on in here, it could trend back lower, right? We could get it back down to 171.50. Under the hood, Amazon's not popping much. Apple, little bit. Netflix couldn't get going. Very strange, the action. We're popping because of Nvidia. I mean, the Q's are up because of Nvidia. Nvidia. That's about it. Names are coming. I'm just saying under the hood, there's things that are off. And that's all I'm saying. Something about this market, they bought the rumor last week. They sold the news. Okay. You buy the rumor, you sell the news. Great. But now, will they buy it again if the deal goes through? Maybe. And maybe we pop. Hey, I have longs and shorts on. I've been long SSO since January.
Which is the double long S&P 500 for those not familiar with the SSO.
Right. It's a double. That's in my long-term account. I've been long that since January. I wrote it up, wrote it down. I stay with it longer term. And then we'll see what goes on with it. I'm looking for maybe up higher, 52.75. Maybe it closes the gap up to 55.40. But I have shorts on too. So I feel like it's a two-sided market with certain aspects, but the Dow.
I love the Nvidia short. I'm going to join you for that trade. I'm looking for the entry point. Market opens in 10 minutes.
It's hard. It's hard to like give a recommendation to short a name like that. So it's like you take it. It's hard to make a short recommendation in general in a trading room. And I know because being short and staying short is very hard, right? So, I've been short the DIAs since April, since like 339. So, and and it's 327. I'm not covering yet, but
Hey, there you go. She trades the Dow Diamonds. JC,
I feel like you and Kenny Glick are the only people I know that trade the Dow Diamonds. God
but look
bless
at
you.
it. Look at it. I mean, I could cover it now and have a great profit, but I'm going to keep it on. But you can't tell someone to stay in a short. I mean, it's a very hard thing to do.
I like this Nvidia short, tight stop. I'll be waiting for your entry, Kimmy. I'll be right there with you. I am. I like it. I like the trade.
You got to let it settle for a bit. You don't necessarily have
Dude, $200 billion overnight. Give back $1 billion or $2 billion. Not a big deal.
Right. Listen, watch this 400 level. Watch this 400 mark on it. See how it goes.
Both sound crazy. I'll just say it.
Why do we sound crazy?
This thing's a freight train.
Yeah, it's a freight train on a longer term time frame, but in a 30 minutes to an hour time frame, you can get
I'm not
30
saying
points,
short
20
big, you
points.
short small and something like this. But
Yeah.
if it drops 20 points, you could have a 15, 20. You have a nice little trade.
Understand the time horizon here, Strazza.
We'll find out in a half hour. How about that?
We'll see how it goes.
Kimmy and me are booking 40-point profits here. Strazza's freight train.
There's my little doggy on this one.
We'll find out. All right.
We'll see what
Bye,
happens.
guys.
All right. Thanks a lot, Kimmy.
All right, Kimmy, love you.
Kimmy Sokoloff runs a day trading room every single day. That's where she's going right now. When she leaves our show, she goes straight there, and she live trades the open every single day. It is private. It is exclusive. If you want to get into the room, it is a premium service. This is what you should do. Email the email on the screen, and just do me a favor and just put like Kimmy somewhere in the email subject or the body, so I know what you're talking about. And email that email address. Put Kimmy somewhere in there, or Kimmy's room or whatever, and then we can talk about how to get into that room.
That trade's going to work. That trade's going to work.
She's there every single day. Apparently looking to shorten Nvidia for a quick one off. We'll see. I don't know.
We'll wait for the entry. She'll call it out. That trade's going to work. Watch. I'm going to parlay short Nvidia, long Miami Heat tonight. Parlay.
All right.
We'll see. All right. You know what we did not get to
the chart report
yet? A lot. There's a lot we didn't get to actually. So I'll let you guys decide where to go. We can do chart report. We can do hot
chart
corner.
Report.
There was a few earnings we didn't even cover. We just did the Nvidia.
We covered the big one. The one that matters.
I don't care about the other reports. I'll talk more about Nvidia. We could go anywhere you want, Spencer. Dealer's choice.
Wants to talk about Nvidia all day, except he doesn't want to short it.
All right, hot corner.
Yeah,
let's do it. Let's do hot corner.
All right, do it.
Hot corner. So hot right now.
Oh, the Baker Bros are making moves, Strazza. Strazza gets very excited when the Baker Bros are at it.
Yeah, they're so hot right now. They're always hot. So the Baker Bros are probably my single favorite institution to track from a Form 13 perspective. These guys make long.
What is a Form 13?
So the 13Ds, 13Gs, or 13Fs, right? The institutional filings. Mm-hmm. I want to know what these guys are doing. Here's why. I think we talked about it a little bit last week, how the list of institutions that you really can find value in tracking for Form 13s is shorter than it's ever been, in my opinion, because it's been really hard for these value shops. Baker Bros has been just a consistently successful biotech only, long only hedge fund, right? So they make very sizable long-term bets on biotech stocks, and they are the best in the business. Everybody knows about it now. Everybody's watching these guys. And they just came out and they dropped a big one, a big Form 4 for Acadia Pharmaceuticals. You got to pay
$4 billion out of San Diego.
$4 billion is the cap, right?
Yeah.
So Baker Bros, they just reported I think a $20-something million purchase, but they own about $1 billion of Acadia. They own more than a quarter of the outstanding shares, right? More than 25% ownership in this company. So we want to always pay attention to what Baker Bros is doing in general. So Acadia, we want on our radar, and I just want to go down their current portfolio of holdings based on the most recent 13F filings. Seattle Genetics, that's SGEN. They own about 24% of that stock. By far their biggest holding. They own $9 billion worth of shares in Seattle Genetics. Their next largest holding in their portfolio is a third of that at about $3 billion. That would be Beijing, BGNE. It's like a Chinese genomic stock. Pat and I actually met someone in New York a couple weeks ago who worked for Beijing, and she was just so shocked that I knew so much about what the company did. And I was so excited that I met somebody who worked at Beijing. And, we were talking about Baker Bros. So that was fun for me. And just going on down the line really quick, Insight, INCY, BioMarin, Kodak Pharmaceuticals, MDGL, which is Madrigal Pharmaceuticals. These are all top holdings for this company. Want to pay attention to all of them. So Acadia.
These are Baker Bros' holdings. This is a biotech hedge fund.
That's right. That's right. So Acadia, big filing, gets the spotlight today. Some honorable mentions. Kelsey Warren's at it again. Like I said, this guy keeps coming out buying shares.
That's the energy transfer guy, right?
That's right. And then we got to mention Toll Brothers, right? For me, whenever you get an initial Form 13 filing, those are the best ones you want to pay attention to, because usually it's an amended Form 13 where they're just saying, hey, we added X amount of shares or we trimmed X amount of shares. This is telling you new position, new investment, right? So Toll Brothers, we got one from Greenhaven Associates right after earnings, right? And JC, if I remember correctly, we were talking about home builders just yesterday or the day before and saying 3 scary candles, for home builders, 3 straight days of selling. Didn't look, so great. Had to keep an eye on it. Guess what? It looks like they're going to be just fine. The last 2 days, today and yesterday at least, some improvement there. Institutions coming out, buying this dip. And I think you will continue to see home builders have the dip bought.
Greenhaven sounds like a stop on the train station on the Metro North in Connecticut, right?
Yeah, West Haven,
Yeah,
New Haven.
Greenhaven sounds like it would be.
Yeah, fair enough. But no, that's what really stood out today. And then just as a programming note for the hot corner, the lists have been very long past few weeks, right? So if you've been looking at our daily note and saying, wow, look at all these insiders buying, it's always a good thing to see insiders buying, but let's put some context to it. During earnings season, we have what's called blackout periods for a lot of Form 4 filers, right? A lot of executives will be blacked out and not allowed to purchase or sell shares, right, in the weeks heading up to earnings. Then after the earnings report drops, they're allowed to transact in the open market again, right? So then you see all the Form 4s, come flowing in after the earnings blackout period pass. That's really a large reason why the lists have been so long lately. Everybody was waiting for this earnings season to pass, and now you're seeing a lot of insider buying. So it's not a negative thing, but it's just good to know kind of the trends and when these guys can buy and when they can't. Right?
Yeah, it's not a negative thing. How positive is it? I guess we'll see, but it's definitely not a negative, right?
And then we're talking about insider buying, institutional buying. Let me just talk about, Spencer sent me an awesome article from the Wall Street Journal yesterday about how stock buybacks are propelling share gains, right? So the stocks are the companies are coming out, they're buying their own stock, and that's why stock prices are rising. It's a big, big problem, the Wall Street Journal will tell you. Let me just say one thing. The best performer by far in the S&P 500 this year, actually Meta's close. So Nvidia is either the best or second best performer in the S&P 500 this year, the first big tech stock to make it back to new all-time highs. They didn't buy back a dime of shares in Q1. 0 buybacks. So that was all investors buying shares and sending the stock price.
By the way, there's nothing wrong with buybacks. Can I just tell you that? A company's job is to increase shareholder value, not to use that money to hire employees or to give employees money. It's to increase shareholder value. And if they think the best way to do that is by buying back their own shares, then good for them. Look at Apple. How much is Apple buying back? They're buying back like $100 billion or something. Like,
I'll take a buyback over a dividend any day.
All day.
Any day. So would Warren Buffett. So how's that?
Yeah, how's that? Yeah, exactly.
I think the point was that we've reached the phase of the cycle where you're trying to figure out why is the market doing what it's doing. Oh, it must be buybacks. It must be.
Yeah. Why do I keep getting it wrong for fighting this uptrend? Why do I keep losing money shorting stocks? Oh, it must be the buybacks.
When you look at sentiment these days and sentiment indicators, ask yourself, is this denial? Right? Because we are very much in the denial phase of sentiment right now. Nobody wants to believe a new bull market is upon us. And shit, some stocks are already back to all-time highs now. So getting a little late out there.
That's right. That's right.
All all those transactions, there's our opening bell. All those transactions that Strazza was just reading are from the hot corner. Find out where the big money is moving with the hot corner. It tracks all the biggest trades from hedge fund titans to DC politicians to activist investors. Every single day is delivered to your inbox for free. Use the QR code on the screen. Use the link in the description and get the hot corner today. All right, it is 9:30. That was our opening bell. We're going to be joined in 10 minutes by Sean McLaughlin, head of All-Star Options at All-Star Charts.
We got Sean. We got to do talking the tape at some point today also.
All right, well, before we do that, let's just look at the chart report real fast from yesterday.
Let's do it.
And then we can talk some tape. All right, let's get up on the screen here. Where's the chart report? There it is. This is yesterday's edition of the chart report. Comes out every single day. Let me scroll here.
I got to point out Brian Lund. He's right, man. Shout out to Brian Lund. Scroll all the way to the bottom, Spencer, on yesterday's chart report. Brian Lund keeps pounding the table that nobody's talking about this Carl Icahn implosion. Zoom into that chart. This thing is, this is Carl Icahn's company. Yeah. It's the IEP. Where is it? There it is. IEP. This is Carl Icahn's. Icahn Enterprises. Nobody's talking about it. This thing's getting destroyed. Strazza, talk to me about this. What the hell's going on?
It's a problem, and people are starting to talk about it. Did you see? Go and find Bill Ackman's tweets from last night. Dude, he's involved. There's gonna be a thing. There's gonna be a thing between them.
Why, you think that Ackman's shorting this thing?
Listen, I think there's good reason to short this thing. That short report made a lot of sense to me. This company has problems.
What are the problems? Talk to me like I don't know. I don't really know what's going on. Is it like accounting?
I don't fully understand like the share redemption structure. It's like equity accounting. I don't fully get it. Okay, but Icahn can basically support the share flow in a way, and then he can add and remove shares as needed. I don't understand the exact mechanics of it because it's a very strange corporate structure. But I think it was who did the deep dive short report on this?
It was from Hindenburg, and the crux of it, I don't understand all of it either. But the crux of it was that people own the stock because they see it's got a nice fat dividend yield. But Hindenburg's contention was it's an artificial dividend yield because every dividend he pays, he's like diluting you in a way. Because of the shares.
Capital structure problems.
Right.
You can see it in the price action that it's not good. And I would be shocked if Ackman's not getting on the other side of this because those two guys, I don't know if it's ever going to end between them.
Correct me if I'm wrong, but this used to be a $400 stock and now it's 10.
Really? Listen, nobody cares about this thing. It's one of these asset manager stocks. Nobody pays attention to it. That's how it went under the radar for so long. Here's the other important thing. If there is a hedge fund,
I have that wrong. Sorry about that. I got that wrong.
Ackman has one too. Ackman has one of these too. I'm almost positive. I think Einhorn does too. If there's ever a hedge fund that tells you you can invest in their hedge fund through a publicly traded stock, just run in the other direction. None of it's good. It doesn't make sense. Stay away. This is one of those. Icahn's a great investor, a titan of industry, but I wouldn't touch his, publicly traded.
Yeah, this thing's from 150 down to 24.
Yeah, it's no good. It's no good.
So according to my calculations, that's about an 85% decline in this thing. And then just in the last couple months, this thing's cut in half. This thing's making new decade lows as we speak. This thing, and I just wanted to give a shout out to BC Lund, who came on the show last week. He continues to pound the table. I feel like he's the only one talking about this. It's crazy.
Does this thing not look like Pac West?
now that I know what Pac West is, because I had never heard of that, and by the way, just to circle back finally on that, I've been pounding the table that nobody cares about these little banks disappearing, and I get like a lot of pushback. Oh, JC, but the employees, blah, blah, blah. Nobody cares. I thought that they would care. Like if First Republic is gone, Silicon Valley Bank, my guess was people would care.
Yes.
But they don't.
Guess
so
what?
these little billion-dollar banks that no one's ever heard of disappearing, nobody cares. Nvidia's up 200 billion overnight. Who cares about these billion-dollar banks, right?
I got a hot take for you. People are going to love this. Their employees don't really matter. They're not going to move the needle. They don't have a lot of them, and frankly, the unemployment rate is at record lows.
Okay.
People need to get laid off and lose their jobs. So
Okay.
True. That's part of the inflation, right? You need higher unemployment.
Spencer's going to censor me if I keep going. Let's move on.
All right. No, I wouldn't say they don't matter.
They don't. The market's telling you they don't matter. By definition, they are irrelevant.
You tell them that. You tell them that. All right.
The market told them already. They don't need me.
All right.
I got a bone to pick with Sean. All right. He keeps talking about this debt ceiling. I don't want to. If Sean comes out and starts talking to me about the debt ceiling, I'm leaving.
Yesterday, we're like, oh, we're selling premium. Sean's like, I'm not selling premium for another 10 days. And me and Strazza are like, what? We're selling premium today.
Okay. Before you do that, though, that chart we were just sharing is from the chart report, as we mentioned. It's a free daily note compiling all of the best charts and wisdom from around the world of finance. Use the link in the description. Use the QR code on the screen. It's right there. It says the chart report, and that will subscribe you to the chart report. Free, like I said. So do that. 9:36. Someone in the chat just said, but I don't know if they're joking. Nvidia is tanking.
Told you.
No,
Yeah,
it's not, dude. Nvidia is not tanking. Nvidia is up 21.5%.
It's down $30 in 6 minutes.
Yeah, it's and tanking's a strong word.
Tanking is a strong word.
It's more of a light fade.
Yeah, right. A light fade.
Yeah, light fade. A very well-deserved consolidation after $200 billion while you were sleeping. Yeah, that's right. Shout out, Kimmy.
Yeah, that fade was actually a good trade, turns out. If you ain't fading, you ain't trading, right? All right. Should we talk some tape?
Yeah.
Before Sean?
Yeah.
Sure.
Me? Am I on? All right, let's do this. So, as you could imagine, the broader market is continuing today to move in the direction it's been moving in for the past few days, which is lower. What a strange tape, obviously impacted by the big Nvidia report last night that we've talked a lot about already today. So I'm looking through the equal weight sectors right now. I got tech up 2%. Everything else is in the red.
2% equally weighted, FYI.
What's that?
2% equally weighted.
That's right. Yeah.
So you're seeing a sympathy bid across tech because of Nvidia.
100%. That is what's happening. Look at AMD, look at Micron. A lot of these stocks are up big. Anybody with, that has any exposure to AI is moving this morning. And there are a lot of tech names, also a lot of communications names. We'll get there when I talk about the cap weight. But when you look at, the laggards today, it's really energy again. And I don't love to see that. Energy had strung together like, 5 or 6 straight up days. Things were looking better, giving a lot back today, though, on an equal weight basis, down 2%. All the subgroups are negative. Then just, looking at the defensives, are kind of in the middle of the pack here, utilities and consumer staples. And then you have financials almost flat on the day. They're really trying, and industrial. So that would be a big development if industrials and financials could turn positive today. I think we could really use that. So the NASDAQ is still being dragged higher, up about 1.65%. Let's go look at the large cap sectors. Now, communications are also positive when we look at the sector spiders, right? So communications up about 50 basis points on the day. And that makes sense, right? Because your Googles and your Metas are going to be moving in sympathy with this Nvidia report. And then again, when you look on down the line, you got energy with big negative. Small caps are down about 50 basis points. Dow down about 50 basis points. S&P and NASDAQ both being dragged higher by this report. So let's see how this shakes out. I think we'll probably get, some movement and some changes here by the end of the day, whether that's tech catching lower to the broader market or the broader market catching higher. It would be really strange to see such a wide gap between today's winners and losers.
Nikkei in Japan up 1.5% also.
Yeah, I could start talking international when we talk today. Listen, international, there's been some weakness here this week, right?
In the last few days, for sure.
Developed Europe, so we're keeping our eyes on that.
Latin America holding in there okay. You look at Latin America, you look at Brazil. I mean, I got my eye on that, showing a little relative strength, consolidating up here. Keep an eye on that Latin America. For me, it's front and center.
All right, I'm done talking the tape.
Bring in Sean. We got to
Let's
trade.
bring on Sean McLaughlin, Chief Option Strategist at All Star Charts. He's been lurking and he's ready, and we're ready.
All right, so Kimmy just covered her Nvidia short for a profit, so you guys are right. I lose again. Still not for me. But yeah.
Listen, it's a very simple mean reversion strategy intraday. There's opportunities, not just today in Nvidia. Today was just a very obvious, obnoxious one, but you know, there are every day you got these. You got your gap downs that you could buy with a tight stop. You got your gap ups that you could short with a tight stop. But Sean doesn't want to hear about any of that stuff. Sean wants to talk about the debt ceiling.
Sean, give us your daily updates on the debt ceiling. I dare you.
I don't know how I became the guy who talks about the debt ceiling.
I don't either.
That's what I want to know. How did you become that guy? That's not the Sean I love.
I'm not the guy. I'm not talking about it at all.
Where's Sean? What'd you do with Sean?
Yeah, seriously.
I just don't like to sell premium against binary events, just like earnings. I don't like to sell premium ahead of earnings.
Well, we did yesterday, so you came around to it.
You know, I got something. Predictit.org. I'll bet you they have odds for if this thing's going to get raised or not. I'm going to look right now. You guys talk.
All right, Sean. So I came in yesterday's meeting, and I'm like, all right, Shawnee, baby, what are we selling? Everybody's bugging out. You got this debt ceiling and the Fed minutes, and, you know, volatility is elevated a little bit. So I presumed, and you're like, I am not going to sell anything until this is resolved. And me and Strazza are like, what? Right? So then we start going into it, and then you actually came around, and we did sell some premium. So walk me through your mindset. First of all, talk about the trade, and then walk us through the mindset as to why you're like, all right, we'll sell some premium.
Well, I don't know what premium you're talking about. We didn't sell any premium yesterday.
Yes, we did. We put on a bull call spread.
Yeah, that's a long premium play. We paid cash.
Well, fine, but we sold some to pay for. Don't tell me we didn't sell premium. We did.
You can't call that selling premium. That's part of a spread. It's a debit spread. Our risk is defined.
You see how he's cherry picking what we're doing here to fit his narrative?
JC, if we sold premium, then if the stock stayed right where it is and did nothing, we would make money. That is not the case in this trade. If the stock doesn't move, we lose everything. That's not selling premium.
Okay. The way my execution is that I bought one call and paid a premium, and then I sold another call collecting that premium. Did we not?
Moving on.
Okay, let's talk about the trade. What did we do? This is an IONQ. This is a January 1020 bull call spread. It was a $1.85 debit to Sean's point. That means we're long the 10 calls, short an equal amount of the 20 calls for this debit, which is the most that we can lose. So I think that's probably one of the reasons you came around to selling that particular part of is the fact that our risk is well defined, right?
And just as like a programming note before you go, Sean, I mean, this one is a high flyer and it's been moving around a lot just intraday the past few days. So your entry on this is really going to matter. I don't know. Did you enter closer to 9 or closer to 10? Because this thing's been in a wide range.
The stock was under 9 when we got into it yesterday, which is why we wanted to get into it. We wanted to buy it on the pullback, and we got that pullback, and that's why we got in yesterday.
That's important to mention, I think, to anybody.
Right, walk us through your thoughts here. Why'd you come around?
I didn't come around to anything, JC. Let's get back to what we're talking about here. We bought this trade. We paid premium to buy this spread because we liked the defined risk. There is a binary event that's out there that we need to be concerned about. And I didn't want to have any unexposed or unhedged risk out there. But I also wanted to be exposed for when this thing gets resolved, if the market screams higher, which it totally could, a stock like IonQ probably is going to really take off more than some of the others. This is a potential high flyer stock, recent IPO. It's gone through its first initial base of its lifetime, if you want to call it that. And this thing could really get motoring. And that's why I wanted to put on that risk, but I wanted to do it in a defined way. I didn't want to sell premium because I like to sleep at night, JC. We talk about this all the time.
So let's talk about, putting on like a long trade, which is, what we're looking for here. We didn't sell downside puts to pay for our out of the money calls. We sold further out of the money calls to help pay for our out of the money calls, right?
That's a good way of looking at it. Yep.
So if there was not this binary event, if Sean wasn't shaking in his boots, right, and wanted to put on something a little more aggressive, then perhaps we would have sold those downside puts to buy the out of the money calls. But because of this binary event, and I'm just breaking balls. Sean is right. And one of the things I love about Sean is, he's very prudent and very disciplined when it comes to risk. We'll get it right. We'll make money. That's the easy part. It's protecting the money. That's the hard part. And Sean's focus on that, despite our, making fun, is something that I really appreciate, with Sean. And he kind of, keeps us in line. Sometimes, me and Strazza maybe, get beyond the rails a little bit, and Sean brings us back to center, right?
We'll go crazy.
A little bit.
Yeah.
You guys like your YOLO trades.
Dude, JC was telling me something about maybe doing some YOLO trades a little more often the other day. I'm excited about that.
Yeah, some Friday lottery tickets, Sean. We're looking into, because Strazza's had some big winners. There's some big winners out there. We might start taking these things a little bit more seriously. Maybe some way out of the money calls on Wednesday or Thursday that expire Friday, like that sort of thing. We're looking into it.
Ooh, now you've got my attention. That sounds fun.
It does, doesn't it? All right, we'll talk about it offline. Sean, first of all, should we keep Sean for recess? Sean, you want to stick around? You want to stick around till the top of the hour?
As long as you don't mind me, making a couple trades while we're talking. Cool.
This is what we do. I would expect nothing less.
All right.
Enter your hedging trades, Sean.
I shall.
Let's listen before we jump into recess. Let me talk about some things. I got some cross asset ratios I want to talk about.
Shoot.
Wait, before you do that, I just wanted to, because I didn't want to lose the plot here. That whole IonQ trade that was talked about just now, you can get alerted to those trades like that before they're discussed on this show. You can get those trades emailed directly to you for free. So here's what you can do. Use the link in the description or use the QR code I just dropped on the screen. Where is it? There it is. It's on the screen now. It's in the description. Use that link. That link will sign you up for a free note that will alert you to these trades before they're discussed on this show. All-star options. There we go. Strazza, floor is yours.
You see in the chat, Michael Naus is funny. He said, "I'm long Kimmy, short Strazza." Not a bad pairs trade. At least today. She's already got one win. All right, throw up for me. Let's talk about bull markets and the sorts of things that we should see in them.
Are we allowed to talk about bull markets? I get yelled at every time I say bull markets.
We're going to talk about bull markets. You need a bull market shirt, sir. Chart 22. Let's do this. So, 22. So, in strong and sustained bull markets, assets tend to outperform their alternatives. We know this. This is something we know for sure, right? So let's look at cross asset ratios, stocks versus bonds, stocks versus commodities, see what's going on there. This is SPY versus TLT. So just traditional stocks versus long-term treasury bonds, new all-time highs. This chart would look like, nosebleed uptrend higher if you did QQQ versus TLT, new all-time highs for both. If we look at stocks versus commodities, this trend on a relative basis had favored commodities for the past few years now. We're seeing a little bit of a reversal, at least on the short and intermediate term basis. If you zoom in, you can see that even closer here, stocks versus commodities. So we know we want to be in stocks, right? That's what we just showed with these three ratios. We want to be in stocks. Okay, wedge stocks, chart 18. It's going to tell you wedge stocks. This is the NASDAQ versus the Dow, the NASDAQ versus the S&P, and the NASDAQ versus the Russell. If you look to the lower pane, the NASDAQ is already resolving higher against small caps. It's not far from resolving higher against the S&P 500. And it's not too far from resolving higher against the Dow as well, right? We're watching these dot-com bubble highs. So you got to go back 20 years. The last time that the NASDAQ was in this strong of a relative position against its peer benchmarks. So we want to be in stocks. Frankly, I think we want to be in growth stocks, and these charts were meant to show that. What do you think, JC?
Well, you're not going to get any arguments from me. It sounds like a lot of things that we've been saying are really coming to fruition. The question is like, what are we going to need to see that this has stopped? And I think what me and Todd were talking about earlier. Sorry that I didn't let you ask too many questions. I got all excited when my favorite technicians are on. Sorry about that.
Keep hijacking these interviews.
I know. Sorry. I had a lot of questions. What kind of questions, McGee over here? I think it really comes down to the rotation. Like what we're seeing, like Nvidia breaking out, is that really that surprising? Maybe to the magnitude that it's breaking out might be a little bit surprising, but the fact that it isn't. The fact that technology continues to do well, NASDAQ, new 52-week highs again today. None of that stuff is surprising. What I'm more interested in, do we get that rotation? Do we start to see that bid in financials and industrials? That's where my, small caps, emerging markets, like that's really got my attention. All this other stuff that you mentioned is not really anything new. It's really, part of the core of our thesis, really. And now we're looking for that rotation is how I look at it.
I think it's so important, JC, and I could answer the question that you asked to Todd. I think it's got to happen like ASAP. You got to see that rotation.
You said no expiration date.
You got to see that rotation in the cyclicals and value. He's saying they just can't break, right? They can't violate those key levels. So he's saying they could go sideways. I think they got to, pick up the slack here because growth and tech are going to need a breather. And when I look at market internals for the NASDAQ, they're great and they're confirming new highs. For the S&P, they're not. And that's just because there's too much cyclical and value stuff in there that's dragging on the index. If those groups can pick it up, then we will start to see our market internal indicators confirm new highs at the S&P, but really not quite yet.
Honestly, an expansion of the new 52-week highs list. Todd said it. A lot of these stocks, a lot of these sectors are in the red zone. If we start to see, like you said, a few weeks or even a few strong days in the market, you're going to get that expansion in the new highs list. So that's another one. But that's part of that rotation that I'm talking about. Industrial, small caps, financials. If you see a bid in those, you're probably going to see that expansion in the new highs list.
Yeah. So we're looking at the percentage of stocks above the August highs. Did some work with this yesterday. And back in Q1, more S&P 500 components were actually above their August highs than today. And that's all the value stuff. If we did it by sector, you would see far more tech stocks above their August highs today, far more communication stocks. But that's your financials, your materials, your energy weighing on that indicator. So I want to see new highs in the percentage of stocks above their August highs before the S&P gets it done. Oh, there it is. Look at that.
Beautiful.
So that's what I'm talking about right there.
All right, you guys want to do some recess?
Yes.
Please.
I know you do. That's all you want for the whole show is recess.
Some things never change.
JC wants to go
questions too. We have any good questions from the chat? We should take some questions.
Yeah, if you have a question in the chat, drop it in. JC wants to go from state of the market straight an hour of recess. That's what he wants.
All right, I'll start because I'm excited for it. I want to give a shout out. Put in this slide too. I want to give a shout out to Morgan Housel. In my opinion, one of the better writers, maybe the best writer of our generation in finance. The Psychology of Money is a fantastic book. Highly recommend it. I just heard that he's sold 3 million copies, by the way. 3 million.
Wow.
Yeah, seriously. Good for him. And this is an old buddy of ours, so we couldn't be more stoked for him. He actually mentioned that he's got twice as many sales in the audiobook than in the actual book, which I thought was interesting. I actually listened to the audiobook in this one for the record, so I'm part of that 2-to-1. And Morgan was also, if you want to go to the next slide, Morgan was also a guest on the Compound and Friends with Josh Brown and Michael Badnick. These are good friends of ours. Strazza and I were actually a guest on this show in January. But listen to the episode. I thought it was great. Really, really informative. Love Morgan Housel. He talks about the book. He talks about his new book that comes out in November. Just good episode. And, one of the things that they mentioned in this particular podcast over at the Compound and Friends is that, the 3 million copies that Morgan has sold in The Psychology of Money has transcended finance. Like, this isn't like a finance book. It's not like a book for, like you're not reading The Intelligent Investor or Edwards and McGee or, Warren Buffett's, those are for like finance people. This has transcended finance and has gone into the mainstream And, you know, part of the reason that he's been able to do that is really because it's a lot of stories. You know, earlier this week, I talked about the richest man in Babylon, which was just a lot of stories about money. TLDR, save your money and invest it wisely is the richest man in Babylon lesson. But it's telling a lot of interesting stories from way back in the day. And I think The Psychology of Money by Morgan Housel is kind of in line with that. So that's my shout out for the day.
I've read that book as well. Great book. Fantastic.
All right, this is Recess. This is where we talk about non-stock things, right?
Well, I just talked about the stock thing, so you can talk about whatever you want, Sean.
All right, so listen, I've already been mischaracterized as someone who cares about the Fed and economics. So let me also talk about things that I am not, and that is a basketball fan. Can we talk basketball for a second?
Nuggets.
I'm so on the Nuggets bandwagon. I said this yesterday when JC did a little video that I've lived in Colorado near Denver now for 11 years. And up until these playoffs, I had not watched a single Nuggets game. I couldn't even tell you a player on the team.
You didn't miss much, for the record. You didn't.
I know. But this year, my son played basketball this winter. I was the head coach, which is hilarious because I don't know anything about basketball. But because of that, my son wanted to watch the playoffs. And so I started watching from game one of the playoffs this year with him. And we've been watching the whole way. And this has been fun. And now I'm excited because they're going to be in the finals. And more importantly, it looks like it might be against JC's team. This is why I'm excited. This is going to be fun.
Yes. Hopefully we can close it out tonight so that we can, rest stop, get ready. It doesn't start till the 1st.
Really?
Yeah. That's next Thursday.
Well, because nobody thought that both of these series would go 4 games.
True.
Yeah.
All right. So just to mention before we get off here, a big item in the news today is that I think Fitch might be downgrading the U.S. credit rating from AAA to reflect worsening political partisanship, preventing a debt deal. That's going to keep happening. You'll see the ratings agencies come in and do that the closer and closer we get to this deadline. And then for me, I did spend an hour of my day yesterday listening to the Nvidia call, so I might as well give you something from that. Key takeaway, they have a lot of partnerships, obviously, with these other tech stocks. I dropped in a ServiceNow chart 32. Let's look at this. So this is one of those peripheral AI stories, I think. So ServiceNow, popular, really large software company. Look at this base. These are the kinds of bases we want to be buying. So they have a big deal with NVIDIA. Talked a lot about them on the earnings call. I don't understand exactly what their partnership is, but ServiceNow is doing things in the AI space. Seems to be very bullish. They are getting that sympathy bid today, resolving higher from this base on the heels of the NVIDIA call.
How many charts look like that, Strazza? How many? There's a zillion of them.
And they keep working, so keep going back to the well and keep buying the ones that look exactly like this. So here's one for today. I just wanted to throw that out there.
What are you using? Are you using like that app to listen to the conference calls?
Quarter's great. You were just talking about our buddies over at the Compound. They sponsor them. They should sponsor us. So if Quarter, you're listening, I like you a lot. We use your stuff. Reach out. But yeah, that's Quarter without the E. The Quarter
I'm never going to use it, so don't even bother emailing me.
I actually listened live on NVIDIA's website, but
because Quarter's only after the fact.
I think they do it live too, and you have the materials right there. Like you can flip through from the call back to like the actual earnings release right on your phone. And they just launched the desktop version, which I haven't used yet, but I will.
Nerd alert.
Strazza, you're such a nerd. Listening to conference calls,
my
goodness.
Calls.
I go straight to the just so people know, if anybody is interested in this, because this is something that people do, just so you guys know, you go right to the investor relations page of the company itself. Right, go straight to the company website. They'll have a nice investor relations page, and they'll have everything you need right there. If you're on the go or want to do it from mobile, Quarter, you're not gonna
people in Key West, most people in Key West go for long walks when they want to, have some fun, long walks on the beach. But you listen to conference calls. Good for you.
No, I'm with Steve on this one. Every so often, they're very interesting. Usually, they're not, but every so often.
Isn't the Steve Wynn conference call like the best one every quarter?
He's hilarious, but Cliff's Natural Resources CEO is my favorite to listen.
What about the Ritz Cabaret guy?
No, RH is the best one.
I don't know if he even runs the earnings call, dude. I don't know if he's that involved in the actual, financials of the company. Or
Spencer was telling me he wants to do some channel checks.
I was not. Strazza, didn't you want to mention the Corning Museum of Glass or something?
The what?
The Corning Museum of Glass. Didn't you
Yeah,
say
let's
that?
talk about this. So
Why?
Corning was on our hot corner today for unusual options activity. So that's Corning Glass, GLW is the ticker symbol. They make everything from like fiber optic cables, to like telescopes and everything cool under the sun. They have a museum in New York somewhere. I've been there, and the place is amazing. Spencer was just telling me he's been there too. So
Somewhere it's in Corning. That's
okay,
where-
yeah, Corning, New York. That's a place, I guess. I don't know what goes on up there.
Yeah, look, I was there on New Year's, and look what I made a flower.
Dude, they do these demonstrations, like these
look at that.
demonstrations.
It looks like a smoking device.
You could.
It looks like it, but it's not.
They sell like they own like Pyrex and all those like nice things. So they have a little store there. You could shop, buy some glassware, but it's really just cool because the history, everything that they've been involved in over the years, just a lot of cutting edge technology. So the museum is really cool if you ever do find yourself in Corning, New York.
Do you like buying this dip back to those 2018 highs, 2019 highs, finding support? You like that the GLW chart?
I didn't even look at the chart.
It's been in a downtrend for a year and a half, like a lot of other things. But finding support at that point, it's worth a look. Worth a look.
They do a lot of cool stuff. Yeah, $27 billion market cap. They pay a 3.5% yield. Yeah. Listen, materials got to get it together.
They do. Maybe they do. I mean, up front and center, if we're going to get an expansion in that 52-week highs list, if we're going to get that sector rotation, you're going to see a bit of materials, energy, financials, industrials. I'm here for it.
Yeah, I think we need it. Tech can't do all of this alone forever. So
that's right.
All right, that is our show for today. I want to thank our guests, Kimmy Sokoloff, Todd Sohn, and of course, Sean McLaughlin. Thank you for watching as well. Thanks to everyone in the YouTube chat. We appreciate all the comments. If you like the show, hit that thumbs up button, subscribe to the channel. We'll let you know when we go live. Speaking of going live, there's a lot more coming up today on our channel. Busy day for us. We have options jam session, right, Shawnee, at noon Eastern, I should say. We have the hot corner with Strazza at 12:30. Chart request live with Strazza and myself at 1, and part of the price action at 2. So a busy day for us today on Stock Market TV. Stay tuned for all of that. Have a great rest of your day, and happy trading. See you guys later.
Adios. Thanks, Shawnee.
Run it. I can't take no loss. I don't even know what it costs.